Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Let's get another corporate conversation going now. Patanjali Foods, that's the stock on our radar. The company's revenue and EBITDA overall came in higher YOY, but the food and FMCG EBIT for the company came in 39% lower YOY. To discuss this and the outlook for FY25, we are now joined by Sanjeev Asthana, the CEO of Patanjali Foods. Mr. Asthana, good morning. Thank you so much for joining in. I wanted to understand the recent change in the duty structure for edible oils. How has that changed things for your business? You had earlier indicated that edible oil markets are experiencing high volatilities towards the later part of the quarter. How has the quarter gone by after this change that has come by?
So the duty change has been very positive in one sense for the trade at large and the overall for the consumers as well, because the markets were under a lot of stress. So government took that, the step at two levels. One was to support the farmers with a big oilseeds crop coming. And second was to sort of bring it at a realistic level, which is at par with the international sort of value system overall, the way it is trading. It has been beneficial. So, the companies got one-time sort of gain towards towards almost like 15 days in September. But broadly, it sort of equalizes because then the overall sort of market prices also tend to, adjust themselves to the changes in the duty. And partially beneficial, I would say, but it augurs well for the company now in the next quarter because some of that gain that we'll carry forward. And our margin profile on the edible oil has become pretty consistent. So, for example, in the first quarter, also the margins on edible oil were 4%. Right now, also it's 4% plus. So we're hopeful to carry this momentum forward and keep building on, the good work done, sort of at the company level on the edible oil financials.
But Mr. Asthana, do you think Q2 volumes on the edible oil side slightly fell short of your expectations? Because I think the expectation was that you'll grow closer to 6%. You've done 4.5%. Even at the EBIT level, the expectation was about a 250 crore quarterly run rate. You've come in at 200 crore. Did it fall short of your own expectation? And for Q3 and Q4, what can you guide on volumes and EBIT?
So our volumes have grown. You're right. The volumes are target. Typically, we always give a range of 4 to 6%. So 4% plus is a good volume growth. The country is growing at typically between 2 and 3%, the overall demand side. So we're pretty comfortable with that. And I've often said that before. Our focus is not so much on the volume growth alone. It has to be the quality of growth that we're working on. So it should be profitable. It should be structured growth. And we want the quality of margin to maintain. So if we do anything north of 4%, it's very positive. And that is something which we aspirationally would look at. We don't want 10% margin. We don't want to look at 2%. 4% plus is the kind of range that we're quite happy with.
So even for Q3 and Q4, 4 to 6% is the quarterly volume run rate we should expect. And do you think, given the conditions right now, we could be closer to the lower end?
So volume growth is actually pretty robust for us. So there's a bit of consolidation that has been undergoing in the edible oil market. We're witnessing almost nearly for a year now, where sort of the larger players have tended to benefit a lot on account of the macro factors. So I am expecting a growth range of 4 to 6%, the continued sort of momentum. And margin profile north of 4% is what we are sort of, giving as a guidance.
That's the edible oils business. Mr. Asthana, the big conversation that has been going around is the demand issues that some of these segments are facing in the FMCG space, generally in the industry. Tell us, what has it been like for you in the food and FMCG business? Because we've seen a revenue decline of 7.5%, EBIT decline of 39%. What is the outlook here? Will the second half look better? What will you end the year with?
So it has been a challenge. There's no question about it. In fact, we just finished our investor call, and this was the main concern everyone sort of raised. We are distinctly seeing some decline in the urban demand. Rural continues to be robust for the last 2 quarters. And the way, multiple different sort of support that is being provided, I believe that we will continue to see the momentum on the rural side. The urban, sort of the cities, the demand side, we're seeing some bit of tapering off. I mean, the factors could be, could be the food inflation, could be the factor of some stress overall on the demand side. It does not appear to be hugely significant, but it is certainly cause to watch out for and work towards. So we are seeing that, growth-wise, if we can maintain anywhere between 8 to 10% overall, and especially in the high margin categories. So there, for example, the Indian ethnic foods category that we have, we've seen fairly robust sort of growth. So we'd like to see that the higher end categories, which are higher margin, which provide, a good push to the company's financial. If we can keep seeing the good growth momentum there, and certain staples categories and others, if we see some bit of lower demand, then we are quite happy with. But overall, we have to watch out for the urban demand, because clearly that's a source of some concern that's beginning to show now.
This 8 to 10% guidance is for the full year, or is it for the FMCG, the home foods business?
It's only for the FMCG part of it. So clearly what we are, we'd like to do that. And it's still, we believe that, there are spaces and areas where, we continue to sort of push. And for example, our biscuits, sort of volumes have grown, our revenue has grown just about 5.5%. Ethnic food volumes have grown way better.
But, so in Q2, I think the FMCG business revenues declined quite sharply, right? And you're still confident about an 8 to 10% top line growth for the full year?
Yeah, so we're reasonably confident that for the year, we are getting into the peak seasonal demand. A lot of our products typically, tend to do way better in the third and fourth quarter. So especially in the Indian ethnic food side, that will continue to build on the momentum. We are seeing demand, coming back, for our biscuits and confectionery. Again, we are getting into the peak season for Nutella. So there's some bit of seasonality into the product portfolio that we have. So the second half of the year tends to do better than the first half. And that's where we're looking at between 8 to 10% growth.
All right. Thank you so much, Mr. Asthana, for your thoughts today and what the outlook is looking like going forward as well for the industry and the company as well. That's the word coming in from Patanjali Foods. The stock is down 4% and that's the situation with the market today as well. But with that, we will slip into a short break. As we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth in global leadership will be charted. You do not want to miss this.